The bear market may have just ended before it even started. Let me explain. Bearish sentiment in the stock market right now is at such an extreme level that we have rarely seen investors this fearful in the last few decades. This despite the fact that the S&P 500 is down only 5% from its high. To even be able to call this a correction, we would need a 10% drop from top to bottom. And to be able to call it a bear market, we would need a 20% drop from top to bottom. So this level of bearish sentiment in the market is wild, especially considering that when we go back decades, we can see that right now, the bearish sentiment that we are seeing in the market is the 7th highest level of all time. And every time before this that bearish sentiment has reached levels this high or higher, it has been at the bottom of a major bear market. This is important to note because when investors, specifically retail investors, get this scared, it signals a turnaround in the market. It does not signal the beginning of a larger crash. And that's not the only survey showing this extreme bearish sentiment in the market. We can see this NDR survey about short-term sentiment is also showing extreme pessimism. Now, I've said it before and I'll say it again, that bull markets do not die from old age. They die from euphoria. If you remember, the last bear market we saw in the stock market was from December of 2021 at the top to October of 2022 at the bottom. This saw a 27% drawdown from top to bottom, but it started following the 2020 and 2021 bull market, which if you remember at the time was marked by some of the most extreme euphoria we have ever seen in the stock market. And it wasn't just the stock market, it was crypto, it was NFTs, it was real estate, it was everything. And so just as bull markets do not die from old age, they die from euphoria, bear markets also don't die from old age. They die from panic. And even though the stock market's only down about 5% from the top, we are seeing an insane level of fear and panic selling by retail investors. If you look at the CNN Fear and Greed Index, we are seeing extreme fear for the overall gauge and also extreme fear for every single one of that index's components except for the junk bond demand. Now, it's important to note here that the fear and the panic selling is largely retail. It's small or what's called dumb money. Over the last couple of months, we've seen the opposite behavior from big money, from hedge funds. Over the past 1 to 2 months, we've seen an insane spike in institutional buying. In other words, hedge funds are going on a buying frenzy, whereas a few months before that, you can see they were selling, which means during this big run up to the top, big money was unloading onto retail, indicating that every single one of these extremely volatile sell-offs and drops in the market over the last couple of months has been retail getting washed out. Every time small money buys back in because they think the selling is done, then another drop happens and it flushes them out. This causes fear, desperation, and panic. And eventually, everybody who was going to sell has sold, which means there's no more sellers left in the market. And you can see historically this level of volatility in the market with the VIX being around 22 or 23 is usually the top before volatility starts to bleed out again. We've had a few examples of volatility briefly spiking above this level, but even when that happens, it doesn't sustain. And there's a perfectly good explanation as to why we could be seeing some of this volatility other than just panic selling. If you look at the global money supply, you can see that the last quarter of 2024 saw tightening. In other words, the money supply shrank and the year-over-year growth of the money supply plummeted. On a global scale, we saw tightening financial conditions as a result of the money supply shrinking. There is a lag effect to when the money supply impacts asset prices. And you can see that from November of 2024, for the next couple of months, the market has basically stagnated, moved sideways with excessive levels of volatility. However, since the beginning of 2025, early January, the money supply on a global scale has been moving back up again, and this growth rate has reaccelerated. All these things put together indicate that the market may have bottomed. This bear market may be over before it even began. In fact, we could be seeing the beginning of a market crash just to the upside. Historically speaking, this would line up seasonally as well, considering that February is typically a rough market month, whereas March and the second half of March March tend to see positive returns in the stock market. It's impossible to predict the market, especially over short time horizons. But one thing that stands the test of time is Warren Buffett's advice to buy when others are fearful and sell when others are greedy. It does not mean that you will successfully time the tops and bottoms of markets perfectly. It does not guarantee by any means that you will be able to time the tops and bottoms of markets perfectly, but it does give you a much greater chance of being able to accumulate more shares for lower cost and being able to buy assets at a discount. And if you don't have the time or the data to go and look through and see if people are being fearful or greedy, yes, this video helps, but what about in the future? All you have to do is do a quick gut check. If you're opening up your account and refreshing it multiple times a day, multiple times an hour, or even multiple times a minute because you want to see how much money you're making and how excited it's making you, and you start thinking about all the things that you're going to purchase with it, that's called euphoria, and it's probably time to sell. On the other hand, if you're avoiding logging into your brokerage account, you don't want to open up your app, you actively ignore it because you have that knot in your stomach, that pit, that feeling like, oh my gosh, I don't even want to look at how much money I'm losing, that is called fear, and it might be time to buy. And if you want help from me applying ideas like this to your investing, sign up for my free newsletter. You can do that with the link in the description below. Number one, I'm going to give you access, free gift, my Sentry portfolio. This is my 100-year stocks that are set to provide great returns for the next 100 years. And I teach you all about my stock picking methodology. I give you the list of stocks. It's all free, no purchase necessary. But you also sign up for my newsletter where I send you free emails every once in a while with deep dive insights into the market, what's going on, and analysis on ways that you can invest and make more money. Link is below. As always, thanks so much for watching. Have a great day.